Ladies and gents, today we have a very special guest with us. Today we are joined by Jim Potvin, the Executive Director of our sister agency, the Employees Retirement System of Georgia. The Employees Retirement System of Georgia, or ERSGA, administers separate and distinct cost-sharing, multiple employer-defined benefit pension plans for various employer agencies of the state of Georgia, as well as defined contribution plans and a life insurance plan. They also serve as the state Social Security Administrator for all political subdivisions of the state. Their mission is to be the guardian of the state of Georgia's retirement plans and to promote a dignified retirement plan for the members, retirees, and beneficiaries of the state of Georgia. Jim is the president of the National Association of State Retirement Administrators, or NASRA, and a member of the National Association of Government Defined Contribution Administrators, as well as the National Conference of State Social Security Administrators and the Government Finance Officers Association. So please join me and welcome him, Jim Potvin, the Executive Director of the Employees Retirement System of Georgia. Hello, Jim. How are you?
I'm doing well, thank you.
Are you keeping up with the Braves? How are they looking so far?
Well, it's spring training. Everybody's optimistic in spring training. Looking forward to a fun season from the team this year.
Speaking of sports, how's your March Madness bracket looking?
I don't have one, and I am glad. Given the number of upsets that have been going on, there's no way that I would have been able to pick all of that. So it's probably for the best this year. I'm sitting this one out.
Well, I know after that Ohio State loss, I had to ball mine up and throw it in the trash. So it's been a pretty rough go of picking the teams this year, but there's always next year.
Yeah, Ohio State, and then they beat Florida too, Oral Roberts, right?
That's exactly right. Surprise of the tournament so far.
Yep.
So, Jim, tell us all about ERSGA, if you will.
Sure. Well, ERS is really kind of a sister agency to TRS, if you will. Instead of teachers' retirement, though, we're responsible for the main pension plan for most state employees. Plus, we have responsibility for a number of smaller statewide pensions, plus the state's 401k and 457 plans, which we refer to as Peach State Reserves, plus a pair of closed legacy life insurance plans that we administer at ERS.
What is your current role at ERS? Can you tell us a little bit about that?
So, as the executive director for ERS, I have a number of responsibilities. I lead all aspects of our operations. I work with our executive staff and the board to set strategic direction. We're responsible for all reporting and compliance activities, work with the General Assembly and their staffs on various legislative initiatives. And of course, I'm the spokesperson for ERS in things like legislative committee meetings with the media and in interviews like this one.
Understood.
Relative to the membership of ERS, what is the size of the active membership population versus the population of retirees?
Well, our current active population is right around 56,000, maybe a little bit less at this point. And it's been interesting because it's been declining for the past 12 years or so. At one time, we were as high as 75,000. But that number has been decreasing for the past 12 years or so. And that's been occurring at the same time as our retiree population has been increasing. Now it's just under 54,000, so it's very close to a 1-to-1 ratio. I will say that the number of retirees, the rate of increase is slowing. So we're getting close to what is probably going to be the peak of the number of retirees that we have. So I guess you'd call ERS kind of a mature system, which is important because it has implications for how we finance the system and get contributions into the trust fund. Those contributions are based on a percentage of our active member payroll. So if that's not increasing, then there is some pressure to increase the percent of payroll that has to be contributed to the system. Also, a relatively larger retiree payroll means that it takes somewhat longer to recover from times that we might have negative experience, like lower investment returns, for example. So we have to be really diligent and proactive about managing the liabilities of the system and making sure we don't take on too much at the wrong time.
You know, Jim, when I first started at TRS, I would hear comments like, oh yeah, she's under the old plan, or he's under the new plan. Would you mind explaining the differences between the ERS old plan, new plan, and the hybrid GSEPS retirement plans?
Sure, absolutely. So the ERS over time has been divided up into 3 distinct benefit tiers. What we refer to as the old plan was the plan that was in place from 1950 at our inception through 1982. That had a benefit structure that was a little bit more robust than the ones that we have in the later tiers, including a provision where if you had 34 years of service, you could retire immediately and receive service as if you had worked until age 65. So there was potential for long-term employees, especially, to receive a very nice benefit from the ERS old plan. In 1982, the General Assembly passed what we call the new plan. That was in place from 82 through the end of 2008. And that was a pretty basic 2% times years of service times final average pay plan, very similar to the basic formula for the teachers' retirement system, as a matter of fact. And then in 2009, that was when the what you call the hybrid GSEPs effective. And what it really is it's two plans. So we have a pension plan still, but it's a 1% times service times final average pay. So it's about half of what the new plan was. But to enhance it, we also have the 401k plan, which includes an employer match of up to 3% of pay if the member will save at least 5%.
I would imagine that some of those changes came about as a result of the changing times. And I think it's a good thing that as times change, your agency has been flexible in responding to those changes.
Right. I think you have to be flexible over time and react to the changes. In this case, a lot of things happened over our history that has led to the place that we are today.
Jim, I'm in the GSEPs plan, so my interest in this question may be a little bit selfish, but how is the GSEPs plan beneficial to newly hired state employees?
Well, I mean, having a retirement benefit in general is a very significant part of an employee's overall compensation package, kind of like health insurance and other fringe benefits that we receive. And the way the GSEPs works, like I said, there's two plans, so it allows employees two different mechanisms for starting to save for retirement. You have the pension plan, where employees are automatically enrolled and the participation is mandatory, and the investments are handled in a pooled situation. So we have a trust fund, and employees are paid out of that trust fund, and the investments are managed by a team of professional investors. The 401k plan has the matching contribution that I described earlier. Participation is you're automatically enrolled, but it's not mandatory. You can opt out or you can change your level of contribution or savings. And the investment types, you have a menu of investments, but the ones that you choose, those are up to the member. New employees, especially young ones, have a lot of competing financial priorities, but we really don't want them to forget about this one, about their retirement. And we really strongly encourage members to take advantage of both plans and at least get that matching contribution in the 401k so that they give themselves their best chance at a comfortable retirement down the road.
There has been some recent legislation about GSEPs and COLAs. What is the future of COLAs for the GSEPs plan and also prior plans in ERS?
Well, so for old plan and new plan retirees, state statute authorizes the ERS Board of Trustees to provide for what we call post-retirement benefit adjustments. COLAs are one type of benefit adjustment, as long as the system's financial position can support it. For ERS, COLAs are not automatically part of the funding of the system. So whenever the board approves a COLA, it adds something to the overall costs of the system. So for the past dozen years or so, following the dot-com crash and the Great Recession downturn, the board has provided only limited one-time supplemental payments for retirees and not actual true COLAs. Now, for GSEPs retirees, it's different. And we don't have too many of them yet because they just reached their 10-year mark and started vesting a couple of years ago. But there are a few out there. And in any case, the board does not have authority to provide them with COLAs. COLAs for that group would have to be approved through the legislative process.
What exactly is SB 167?
So Senate Bill 167 has two main components, and in different ways they seek to address both of the points that I just made. So with regard to the GSEPs population and the retirees from GSEPs, SB 167 would restore the board's authorization to determine and credit post-retirement benefit adjustments for that population. And it would do that for some of the smaller statewide plans that we also administer as well. Senate Bill 167 would also require pre-funding of COLAs in the ERS plan, so that would be a big change from the way that we do it now. And the intent would be that a 3% COLA would be provided, at least in most years. So what's going to happen now is that Senate Bill 167 is probably going to be sent off for an actuarial study, and that will basically determine how expensive it's going to be. Next year during session is when it would be able to be considered for passage. Candidly, I would expect that in its current form, it's likely to be too expensive to just pass straight through. But I would say that it does signal that there's a desire, especially in some corners, to explore ways to be able to fund and provide adjustments for retirees. And so that conversation, I'm sure, will continue whether this bill passes or not.
Speaking of retirement benefits, what is the average monthly service retirement benefit amount?
Our average right now is around $2,200 per month or so something close to $26,000 per year. That number, too, is slowly declining over time as the different benefits tiers have become more and more prominent in the retiree population. They tend to provide slightly lower benefits. Although we have to remember, too, that as people in GSEP start to retire, their pension will be lower, but the 401k is also part of the story, and it's not included in that $2,200 per month number.
A little while ago, you mentioned the cost of the fund and funding. What is the current funding ratio of ERS? And in terms of stability, why is that number important to maintain?
All right, so as of our most recent valuation, our funding ratio was 75.6%, and that was as of June 30, 2019. So what is a funding ratio? Basically, the most basic definition of the funding ratio is it's the ratio of assets that we have in the plan to the liabilities, or the amounts that we're going to have to pay out. So over time, the goal is to make sure that you have enough assets, of course, to make all the payments that are due. So you want to make sure that you always have a plan to be moving toward a 100% funding ratio over time. It's not so important that we have a 100% ratio at any given point in time, but you always want to be kind of moving in that direction. And fortunately for us, the state of Georgia has what I would call an impeccable track record of making its funding contributions for both ERS and TRS. And that really gives me confidence that the funding plan that we have in place is going to continue to be successfully executed and move us toward that goal.
That's great news for sure. Jim, there are certain state employees who, due to their employer or their vesting status, may choose either ERS or TRS membership. Would you explain how that works and what those state employees need to know when making this decision?
Certainly. So if you are, for example, an ERS member, and you move into what would normally be a TRS covered position, you may have the option to choose which plan you want to be in from that point going forward. And that choice is generally available to a member who is vested in their current or ERS benefit in this particular example. So if you had less than 10 years, you would have to transfer into the TRS plan. But if you have at least that 10 years and you have that choice available to you, you can go either way with it. And it really requires somebody to very carefully weigh all the different factors, because the two plans, especially TRS versus the current GSEPs tier of ERS, they're pretty different now. TRS, of course, is entirely a pension, right? It's the 2% entirely out of the pension plan. But GSEPs has the smaller pension plus the 401k with a match. In addition, TRS has a higher employee contribution rate for the pension. I believe currently TRS members are contributing 6% of pay. In ERS, you only have to contribute 1.25% of pay, although I should remind you that in order to get the full 401k match, you have to save at least 5% in there as well. So that does tend to even out the employee contribution requirements a bit. I guess I should point out, too, that this also works in reverse. So if a TRS member who takes an ERS position is vested, then they are going to have that same choice, whether to stay in TRS or move themselves into the ERS plan. So, the only real advice that I can give to an individual at this point is that they really need to talk to both ERS and TRS staffs, and they need to get specific details applicable to their situation before they make a decision like that. Obviously everybody's plans are going to be different, how close they are to retirement, whether they plan to stay in their job for a long time. All of those kinds of things also weigh into a decision like that. So they really need to get all the details that apply to them specifically.
There are also some managers and supervisors in the cafeteria, maintenance, warehouse, and transportation departments of our public schools who may choose either PSERS or TRS membership. Would you provide some details about that choice and what employees should do when hired or promoted into those positions?
So PSERS refers to the public school employees retirement system. And this comparison is a little tougher because TRS and the PSERS, what we call the PSERS, are very, very different plans. Again, TRS is a robust retirement system. It's intended to provide a very significant retirement income for full career employees. The public school system is a much smaller supplemental retirement plan, and it provides a very modest benefit at very little cost to the employee. So again, my advice would be to contact both, teachers and employees' retirement systems to get details about each benefit before making any decisions. But I think in this particular case, members are going to find that the differences in the plans are pretty substantial.
Jim, you are currently the president of the National Association of State Retirement Administrators, also known as NASRA. First, I want to congratulate you on such a high position. And secondly, why is it beneficial for your members for you to be involved with a national pension organization?
Well, there's only two large statewide systems in Georgia, right? It's us, the ERS, and the TRS. And, Dr. Evans and I collaborate frequently, and we talk all the time, and our view is still limited, though, by our own experiences in our state. And what NASRA does is it gives me a chance to reach out to and interact with our peers in over 100 systems around the country, 100 similarly sized or even larger systems around the country. And it's pretty amazing to me. I'm always surprised by how often someone else is confronting very similar issues to the ones that we might have going on, or maybe they've done so recently, and they can provide insights to me. NASRA also brings significant data and other resources to bear, and they can help us benchmark ourselves against similar systems. And if that data that we're looking for doesn't currently exist, they'll go so far as to help us with surveys of other systems, or they'll suggest resources or databases where data like that might be found. They also have many contacts in Washington, D.C., and they do just a fantastic job of keeping us informed of legislation or representing the interests of the public pension community at the federal level. And so from all of this, I can take all the best ideas that I hear when I'm interacting with these folks and bring them back home to Georgia and bring them to the discussions that we need to have here and ultimately implement the ones that make the most sense for us and for our members.
That is definitely a benefit to have such a wealth of knowledge and pool of individuals from which to gain some insight. So it's clear to see the benefit of your involvement with NASRA. Putting on your forecaster's hat, Jim, would you mind forecasting into the future for pensions from a member point of view?
Yeah, well, none of us have a crystal ball or anything like that, but I guess I can make a few general statements. First of all, I firmly believe that well-managed pension plans are a very important and cost-efficient way to provide secure retirement benefits for our membership. But I also think we can't take them for granted. We always have to be looking for ways to improve how we conduct our business. And also, there are risks out there and we have to be prepared for them. We have to try to anticipate them to the best that we can. And I'm thinking about things like economic risks and investment risks and those kinds of things. So from a member point of view, I tell our members and retirees that my number one objective, and I believe their number one concern as well, is the security of their monthly pension benefits. And every single decision that we make now and into the future is going to be with that in mind.
Well, I think your forecaster's hat worked out pretty good right there, Jim. COVID has no doubt affected pretty much every aspect of our lives. Has COVID changed your personal viewpoint on saving for retirement?
I would say in the long run, it really has not. I mean, I've always looked at retirement, and it still, as far as I'm concerned, remains a long-term endeavor for any of us. COVID, I don't want to minimize it. It's been very impactful and very difficult for people to deal with now for over a year. But even a year or a year plus however long it's going to take us to sort of get back on track is still a relatively short-term event when you compare it to, say, a 40-year career plus a 30-year retirement. But again, I don't want to kind of gloss over what the impact has been. I know it's knocked a lot of people's personal finances off balance. It's really hard to think about preparing for retirement 30 years from now when you have issues that you need to deal with today. One way to do that is with emergency savings. I know that anybody who had them prior to all of the recent turmoil are very grateful today because it probably really helped them to smooth over a rough patch. And if somebody doesn't have emergency savings, obviously my advice would be to try to make it a high financial priority we're not always going to have a pandemic, but unexpected things are happening to people all the time. Your car needs tires, someone gets sick, whatever it is. So there are a lot of rough patches that need to be smoothed. How much do you need? We have internal debates about that with our staff, and you read anywhere from 3 to 12 months of earnings. But the important thing is just pick an amount, have a goal, and that works for you and your needs, and get started on it. Having said all of that, to get back to the retirement part of it, I don't want to just forget about retirement. Yes, you might have these other priorities today, and it's really easy to put off retirement savings, but you don't want to do that for too long. It's best to have a goal, preferably in writing, and make a plan for the steps you need to take to get working on that goal. I think that would really help you to stay or maybe get back on track.
I know you mentioned it, but I'll reiterate it. Emergency fund, rainy day fund, whatever you want to call it. But in my very own family, it really made a big difference over the course of the last year. And for those members of my family who didn't have that emergency fund or that rainy day fund, we've already worked with them to put plans in place because it's always going to be something next that comes along. There's always going to be the next thing, and we just want to be better prepared moving forward.
Absolutely.
Retirees want to know how to spend their savings in retirement. Do you have any advice for those folks?
Well, I guess, I go back to my comment about pension plans and how I feel like they're a really important part of retirement security. And one of the biggest advantages that a pension plan like TRS or ERS has is that it provides a guaranteed monthly income for life. You can't outlive it. And you can even go so far as to cover beneficiaries for their lifetimes as well. So you can really plan out what your needs are going to be and try to have this in place throughout that period of time. In ERS with the GSEPs tier, we also have the 401k. Now that has an account balance. But even with that, there's a lot of ways to manage that account so you don't risk depleting it too early. One way is to convert it into a lifetime annuity benefit. There are ways to do that on the open market, and we just implemented an option to do that in our ERS plan. Or, if you want to manage it yourself, you can just do direct withdrawals. You want to be conservative about that because you're going to have ups and downs in the investment markets, and you don't want to take out too much at a time when the investments are down, but it can be done, especially if you have a good plan or a good advisor. And again, I think it's important to have a plan, to know what you need. I would suggest, really sitting down and thinking about what your basic expenses are to see just how close your pension and 401k assets are to covering them. And so then you know what kind of flexibility you have going forward.
On the flip side, what's your best advice for young people about retirement?
Well, for young people, to me, it's really simple. Get started. Again, I get it. There's a lot of financial priorities for a young person: student loans, rent, mortgage, a new car, new family, credit cards, whatever. I mean, there's a lot out there, and I'm very sympathetic to that. But I want a young person to keep in mind that there's nothing that you can do that beats the power of time and compound interest in accumulating retirement savings. So, I mean, even if it's only a small amount that you can put aside, it's really amazing how much it will add up if you go over a long career. And there are examples out there about how if you get started just 10 years later, the amount that you have to put in to get back to the same level is just, it's way more than you would ever have imagined. So again, just, get starting. It's been said before. No one ever gets to age 65 and says, geez, I really wish I had saved less than I did.
Jim, I can remember many, many, many years ago, my very first job was at a Waffle House. And I started as a dishwasher. I think I made $2.45 an hour, but I really loved that job. Anyway, there was a little old lady who would come in every week, and she would always sit at the counter where I washed dishes, and she would always tell me, young man, save $25 out of your check. She would tell me that all the time. Save $20 out of your check every week. $25 out of your check every week. I only wish I was smart enough. I wish I knew then what I know now about saving. And just like you said, you cannot beat time and compounded interest. So that's very sage advice you give right there.
I tell my teenagers something similar, and they kind of laugh at me a little bit. But, I figure if I tell them enough times, eventually it'll sink in, right?
What is the best recommendation that you can give to teachers to incorporate personal finance into their lessons, no matter what subject they teach?
Well, teachers have so much that they have to do already. But if there's one thing that always helped me as a student, it was seeing real life examples applying the things that I was trying to learn in those various subject areas. And that's what I worry can get lost in personal finance. Kids They don't while they're growing up, and then all of a sudden they graduate and they get a job, and we're asking them to do things like manage a 401k account with very little background in that. And so much of what we do in all areas of our lives have some kind of an economic component, right? Budgeting, debt, just the idea of scarcity and making choices. I only have so much money, so what can I do this week or next week? And I would just encourage those who are in a position of being educators to point out those real life applications and the financial implications of the topics that they are exploring, when it comes to mind, to do that. And I just think that there are more of those types of situations out there if you go looking for them than maybe we realize. Anyway, that's where I often got the most benefit.
Speaking of teachers, who was your favorite teacher and why?
I was thinking about that, and I guess I've really had a lot of influential teachers, but there's a couple that I would point to. And it's funny because they were actually pretty different people. In high school, I had an English teacher, Miss Danette, and she'd been teaching for many years, and pretty much had it down to a science, and had figured out for herself anyway that her students would tend to rise to the level of her expectations. So she set those expectations quite high. And I'm pretty sure that the grades I got in her class were probably the lowest that I got from any class that I was in high school. But there was something about getting a high mark from her. It just meant a lot. And, you knew you had done good work if you got that mark and you wanted to try to do it again. So then in college, I had an economics professor named Dr. Yee, and he was quite different. He was young and he was brand new to our school, but he really had just an energy and an enthusiasm for the subject that for me, I just really caught on to that, and I couldn't help wanting to explore it more. I guess it didn't hurt that when I had to choose a topic for my term paper, I chose a baseball-themed topic, and he was really into that. We kind of bonded over it. But actually, that was a good example of taking what for me was a difficult concept and finding a way to learn about it through something else that I was interested in outside of the class. So I got a lot out of that class as well.
Thank you so much, Jim. We really appreciate you setting aside some time to stop by and talk with us today. I know that our listeners will benefit and be empowered by the information that you shared with us today.
Thank you.
We invite you to share our podcast with your family and friends, send us your feedback or questions, or even show ideas. You can reach us at our email address, podcast@trsga.com. On our next podcast, we will be talking about early retirement and the online application process. So join us next time for TRS, Your Retirement in Focus.